Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Post-Golden Week blues, China's rally fizzles as traders question Beijing's resolve to add more stimulus. Chinese stocks in Hong Kong see their worst intraday sell-off since 2008. You are still seeing gains in mainland stocks. Samsung says sorry. Korea's biggest company apologises after admitting it's fallen behind in AI memory chips. We're going to speak to the chairman of Honhai on how the world's top iPhone assembler is trying to diversify. Plus, Hamas and Hezbollah fire a barrage of rockets towards Israel as fighting escalates on multiple fronts, with the conflict now entering its second year. US stocks overnight losing around 1%, 1% on the S&P, around 1.2% on the Nasdaq. Tech took a hit. The geopolitical concerns were there, as was the repricing around the Federal Reserve. Currently, European futures pointing down by 0.8%. A mixed picture on the Asian story, and we'll unpack that for you in detail. The FTSE 100 currently down, flagged down 0.5%. S&P futures flat. Nasdaq futures also pointing just marginally high, up 0.1% after the sell-off across tech yesterday. Let's flip the board and look cross-asset before we break down the Asia story for you. There's a focus on the asset classes linked to the China story, given some disappointment about what officials have outlined in terms of the planning around that economy. But the 2-year currently, when we get back to the US story, 395, still close to that 4% level. Yields moving 4 basis points. Euro-dollar out 109. Brent $79 a barrel. Iron ore taking a big hit in the session, down 2%. You can tie that to China. Let's flip the board and have a look at the China session. Then a split story when it comes to the sell-off in Hong Kong. There is a rotation theme that's happening here, selling off in Hong Kong and moving over to mainland China. But a bit of concern as to the lack of additional measures coming through from the NDRC, that planning body, that part of the state apparatus. Across the MSCI Asia Pacific down 1.3%, the CSI 300, the mainland Chinese index up 6.4%, but lower than it was at the start of the session. HSI over in Hong Kong currently down 5%, and the Nikkei over in Japan losing 1%. Let's get more on the China story and that dramatic market reaction and bring in our China correspondent Min Lo. The first trading session since the holidays in mainland China. Talk us through that reaction then and what we've been hearing from Chinese officials this morning.
Yeah, it was quite a volatile session today. We opened the CSI 300 at 10-11% gains, but then we have pared back about half of those gains because of disappointment around that NDRC press briefing. But I would say that perhaps market expectations were a little bit misplaced here, because the title of that briefing, Tom, I was telling you, it was about implementation of incremental economic policies. Remember, we were just talking yesterday, the NDRC actually doesn't have the mandate to increase fiscal budget deficit without having the State Council putting that through to the legislature for approval first. So perhaps the sort of big bang fiscal stimulus, a more appropriate time for the government to announce that would be later in October when the NPC Standing Committee meets. So today at the press briefing, what we heard from officials was more measures around boosting consumption, for instance, increasing the income of lower and middle income groups, increasing subsidies for new graduates, extending loans to mid-sized enterprises. Officials also urging local governments to complete the issuance of local government special bonds by end October. Now, by end September, 90% of those bonds have already been issued. But this is interesting because it could potentially open up more space at the end of the year for the government to announce maybe new bond issuance if authorities are so inclined. The officials also announced that they will bring forward 100 billion yuan in investments that were budgeted for next year. They are bringing that forward to this year. They're also going to continue to issue ultra-long sovereign bonds, although no details on the size. So we have seen markets really been disappointed. Hang Seng, the Hong Kong market started out in the red today, perhaps a bit of profit taking after we had seen a huge rally of some 11% when China markets were closed. But we have seen those declines on the Hang Seng continue to extend throughout the day, perhaps because of disappointment around the NDRC, and also maybe because sentiment had a little bit been overshot because of valuations. It's already overshot above the 5-year mean when it comes to forward earnings.
Okay, so valuations to some looking stretched, and on some metrics that seems to be bearing out. When it comes to that holiday then, as a gauge, as a touch point on the health of the Chinese consumer and that real estate story, some data coming through that suggests maybe there are some green shoots at this point then, Min Min.
Yeah, so it looks like during the Golden Week, people were not just busy traveling and spending, they were also going around home shopping, according to State TV, CCTV, last night reporting that they are seeing visits by prospective home buyers increase by 50% during the Golden Week holiday. And in Shenzhen as well, new home sales up tenfold during the first 6 days of the October holidays. In Beijing, expressions of intent by prospective home buyers also doubled in the first 3 days of the holiday. So very immediate impact that we're hearing now from the measures that were announced just before the holidays by the PBOC to cut down mortgage rates, existing mortgage rates, as well as down payment ratios for second home purchases. But of course, the question is how long-lived will this rebound be? Because some analysts are saying that the current set of measures are still not enough for a sustainable turnaround. We still need to see the broader economy and confidence around income growth recover for the housing sector to turn around.
Okay. Min Min Lo, our China correspondent, on the details, the data that's been coming through over the Golden Week, the market reaction as well, which is head-spinning in terms of the split that we're seeing with the HSI currently down 5.5% in Hong Kong, but the CSI 300 on mainland China up 6% after the lunch break. Let's get back to what's happening in terms of the macro policy front, the central policy language that we've been hearing from Fed officials. New York Fed president, meanwhile, has said that the central bank is, quote, well-positioned to pull off a soft landing. The soft landing still part of the metric then being viewed, at least by John Williams. In an interview with the FT, John Williams said his goal was to move interest rates to a neutral setting. Let's bring in Bloomberg's Valerie Taitel. Valerie, there is a lot of Fed speak this week. What have we been hearing from Williams? How have the markets been readjusting?
Well, so far it doesn't seem like there's any too much disagreement coming out about that 50 basis point cut that the Fed did. But we do have those minutes coming up tomorrow, Tom. Maybe there'll be some more obvious disagreement when we see that. But it's very relieving to see some green on the screen when it comes to the U.S. Treasury market this morning. We have those 2-year yields, which hit 4% yesterday, backing off from that level, now down 5 basis points to 3.95. But let's delve a little bit deeper into what John Williams told the FT, this article fresh off the press this morning. He said the current state of monetary policy is really well positioned to both hopefully maintain the strength in the economy and the labor market, but also continue to see that inflation comes back to 2%. He also repeated the line from Powell that his goal was to move interest rates to a neutral setting over time. So a lot of agreement still coming from the New York Fed President John Williams to what Powell said yesterday. But it has kickstarted some chatter about the Fed leaning to leaving rates unchanged possibly before the year is over. We did see a bit of weakness late in the session in the equity market, perhaps some readjustment to the fact that all of those cuts have come out of the front end of the U.S. Treasury curve, and we perhaps could see a Fed on hold in 2025.
OK, Bloomberg's Valerie Taitel, thank you very much indeed. So from the Fed to the ECB, some lines crossing from a member of the management board of the European Central Bank. This is the Dutch, Mr. Elderson, saying that the ECB makes decisions meeting by meeting. That is not new. We know that. That is a line consistently coming through from these ECB officials, saying that economic growth risks are already materialising. That arguably is a little bit more interesting. Economic growth risks are already materialising. Again, this is according to Elderson, being quoted in some reporting here. Must carefully assess inflation implications. So some lines crossing there from an ECB official. We'll keep across that story for you. Back to the corporate space then. The disappointment from Samsung. Samsung shares slipping after its prelim third quarter earnings missed expectations. The company issued a rare apology for the weak results, an unusual admission that it's grappling with a potential crisis. The world's largest memory maker is now playing catch-up to its rival SK Hynix, which has taken a lead in producing chips used in AI applications. It's also begun laying off staff, Samsung has, as part of a plan to reduce its global headcount by thousands. So the read across to the broader Asian chip space on the back of this pretty unusual apology coming through from Samsung, then the head of its chip division, fairly newly appointed then, talking about this potential crisis, talking about the disappointing results. Again, SK Hynix has taken a march in terms of the high bandwidth memory that is paired with NVIDIA's GPU chips. You need the two to work together to have those training capabilities around these AI models. And Samsung is not properly in the mix right now. They've shown little progress as well in terms of competing with TSMC on the other part of the business, which is outsourcing production of custom-made chips. So on two angles and two fronts, Samsung is facing that challenge. Samsung currently down 1.1% in terms of Samsung Electronics. SK Hynix has taken a hit as well, despite the fact that it is performing relatively well in terms of the demand for high bandwidth memory. Currently down 3% in the session. The broader read across as well that is being felt in terms of some of these chip makers. SMIC, that's a slightly different story. Of course, the Chinese chip maker down 9%. TSMC, meanwhile, eking out gains of 0.5%. Staying on tech, the world's biggest iPhone assembler is holding its tech day. Later this hour, we're going to speak exclusively with Hon Hai's chairman on his plans to diversify. So stay tuned for that interview. Later today, we're going to speak exclusively with JP Morgan chairman and CEO Jamie Dimon at the bank's Techstars conference to discuss AI investments, the US election, and more. That conversation at 2:30 p.m. London time. Here's what else to be thinking about then for the day ahead this Tuesday. 7 a.m. UK time, we're going to get German industrial production, another gauge on the health of the Eurozone's largest economy, which we know, of course, is struggling. And at 8 a.m. UK time, we're going to get more Fed speak with Kugler giving some remarks as well. So we'll listen in to Adriana Kugler in terms of any more views post that blowout jobs number. 1:30 p.m. UK time, it's the US trade balance. We'll mark that for you. Coming up, sirens sound in Tel Aviv. That's as fighting escalates on multiple fronts a year into the conflict. We have the latest from the Middle East. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Hamas fired a barrage of rockets towards Tel Aviv yesterday, 1 year, of course, after the Gaza militant group launched its attacks on Israel. Sirens sounded across central Israel, but the military says it intercepted most of the rockets. Meanwhile, Hezbollah fired 135 rockets at northern Israel, while Israeli jets carried out heavy bombardment in southern Lebanon. Joining me now for the latest out of the region is Germana Pesechi, Bloomberg Horizon's Middle East and Africa anchor. Germana, it has been once again a busy 24 hours for this region and more challenges for the people on the ground across this space. What do we know about what's unfolded in the last 24 hours or so? And, of course, marking that 1 year since those devastating attacks on October the 7th.
Yeah, well, of course, October 7 is a day of great significance. And what you saw were multiple commemoration ceremonies taking place around the world yesterday, from Beijing to Berlin and at the White House. U.S. President Biden held a candle lighting ceremony with one of the rabbis who was close to the hostage family, one of the hostage families whose son lost their lives during captivity. So a very solemn day for many around the world, but of course, as well, a day of increased militant activity. And during the course of October 7, it transpired that Hamas militants had fired further rockets into Tel Aviv. Sirens went off during the course of the day. All of those rockets were intercepted. But then equally, IDF also reported about 135 rockets fired from Hezbollah into northern Israel towards Haifa as well. And not all of those rockets were intercepted, actually. About 5 actually did succeed at causing damage, and about 8 injuries were reported. Equally, Israel's bombardment and airstrike campaign around Beirut and central Beirut and even eastern Bekaa continues. And then later, towards the evening yesterday, the Israeli military sent out a note warning Lebanese citizens in the southern part of the country to stay away from the coast because they are looking to start launching a maritime exercise around the Lebanese coast as well, which effectively means that about 1/3 of the Lebanese coast is a no-go no-go zone for residents in that part of the country. So the escalation continues, military conflict being flared on all angles, as we spoke about yesterday. And very clearly, this is a situation that has evolved from just a single front conflict to the multi-front conflict that we were talking about.
Yeah, a stark reminder of that, surely, in the last day or so. When it comes to the situation in Iran, of course, many in the region, many globally, on tenterhooks around whether or not Israel retaliates against Iran. What is the latest in terms of how we're thinking about that piece of the story?
Well, certainly all of the commentary suggests that a reprisal is coming. It was interesting to hear from the Israeli defense minister yesterday, Yoav Gallant, in an interview with CNN. He said that everything is on the table. And of course, a menu of different options are being discussed. The reason why oil is trading close to $80 now is because there is an expectation that maybe Israel would be looking to target some of Iran's oil infrastructure. We, on our show Horizons, we were speaking to a former Israeli intelligence official, and he actually seems to think that they're going to go after military infrastructure and not want to escalate it to the point of potentially growing this conflict into an all-out regional war. And indeed, those comments were backed up by some remarks that the CIA director, William Burns, made yesterday in a panel where he said that misjudgments could get in the way of efforts to dampen rising tensions. We face the very real danger of a further regional escalation of conflict. So it does certainly appear as though the U.S. are trying to apply diplomatic pressure on Israel to keep the response contained. Of course, Israel do have to respond because of the extent of the attack that was directed at Israel over a week ago. But the question is this going to be another manifestation of this mantra that we've been talking about the last few months, which is escalate to de-escalate? Or in this situation, is it going to be a question of escalating to actually escalate? And these are questions that we won't know the answers to for a couple of days at least.
OK, Bloomberg's Joumanna Pesechi with the latest out of the region. Thank you, Joumanna, as always. Let's check in on the oil markets. The reaction, of course, you did see Brent back above $80 a barrel yesterday. Now you're back below that at $79.75, just by a hair, down 1.5%. The China story is a larger factor for the oil markets, at least for now. And, of course, that dynamic could change, and could change pretty significantly if there is further escalation in the Middle East. But right now, the oil markets are eyeing the lines that have come through from the state planning body, the NDRC, with no additional significant fiscal stimulus being announced. And so a little bit of disappointment weighing on the commodities market. You're seeing that in Brent, iron ore and copper. Now, Hurricane Milton has exploded into the Atlantic's strongest storm this year, bearing down on Florida as a Category 5 hurricane. Governor Ron DeSantis declared an emergency and millions have been ordered to evacuate. The storm will probably make landfall tomorrow, with one estimate suggesting it could cause up to $80 billion in damages and losses. We will, of course, continue to follow that story for you and the impacts. Meanwhile, back to China, and what a remarkable day as China returns, at least mainland China, to trading after that Golden Week holiday. You're seeing significant moves in mainland stocks. You had seen them rallying about 11%. That has paired right now to gains across the CSI 300 of just 4.7%. And selling pressure in Hong Kong. Part of that is a rotation from Hong Kong stocks into mainland stocks. The HSI, the benchmark in Hong Kong, currently down 7%. But here's the redhead on China. The turnover in terms of stock turnover surging to a record 2.6 trillion yuan. You can see that marked at the end of that bar chart. So that is now at a record level in terms of the turnover that is unfolding in these Chinese markets. We'll keep across this story for you, but some remarkable moves transpiring in Hong Kong and mainland China today as investors adjust the stimulus policy response. Coming up, how two flagship tax-raising plans could end up costing the UK government. We're going to have more on the Chancellor's make-or-break budget. Yes, the countdown is firmly on. October the 30th is the date, and the details are coming through. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to the UK, and Bloomberg has learned that two of the new government's flagship tax-raising plans are under review already ahead of the upcoming budget. We understand internal Treasury analysis suggests the policies could actually end up costing the Exchequer money rather than raising it. Let's bring in our UK correspondent Lizzie Burden. Lizzie, which of the flagship tax policies then are now being put under this added scrutiny?
Well, I would just say, Tom, first of all, that this October 30th budget is really make or break for Keir Starmer. We haven't had a lot of detail out of Labour all the way through the campaigning period up to the election and even all the way through to now. So it's crucial that they can show their sums add up. And as you say, actually, some of their most eye-catching measures to raise revenue, I'm talking about hiking taxes on non-doms and private equity, as you say, might actually cost the Treasury money because obviously rich people are the most mobile. And if they just leave, you lose revenue. As Chancellor Rachel Reeves keeps saying, she's got this £22 billion hole to fill in the public finances.
Actually, I didn't know that. Had she mentioned that a few times?
Once or twice,
22 billion, OK.
And she needs every penny she can get. So this money has already been earmarked. It's interesting as well, over the weekend there's been speculation that this idea of charging VAT on private school fees may have to be delayed because of the administrative issues. But actually, that's an area where Reeves' spokesman denies that this is going to happen. OK,
what about tax plans then for the super wealthy, the non-dom part of this story? How are they rethinking that?
Well, because one of the ways she could get money, if these wealth creators are going to leave, is to tax them when they're on the way out of the back door. This is according to various economists and think tanks. If you're going to drive them away, charge them, it could raise £500 million, according to some of this research. Now, at the moment, rich investors can move overseas for tax purposes before cashing in capital gains, and 3/4 re-domicile in places where they pay no tax at all. So, bearing in mind that Australia, Canada, the US already have policies like this, this would cut the incentives for the rich to emigrate. The other question is, though, will they ever come here at all in the first place? But the answer to that is, to some tax experts, this would still be better than other capital gains tax changes, like what the Liberal Democrats were proposing in their election manifesto.
It would bring in 500 million. I mean, it's a tiny drop in the ocean, isn't it? Half a billion pounds. Finessing tax policy is complicated, it turns out. Lizzie Burden, thank you very much indeed. Ahead of this crucial budget make or break. I still don't understand why it's make or break. They have a massive majority in Parliament. Why is it why is it potentially break?
Votes, however,
OK.
Thin and widely spread.
It's not another election for 4 years, 4.5 years.
The Tories are getting a bit of hope.
Make or break. All right. OK. Thank you, Lizzie Burden. Thank you very much indeed. Let's get back to the China story right now. What a picture we're seeing across these Chinese markets. The divergence in terms of the sell-off in Hong Kong versus the gains, more modest than they were at the start of the session on mainland China. There's a bit of a rotation play here, selling in Hong Kong, putting your money to play in the mainland, but also a little bit of disappointment. I mean, you had an 11% stock jump at the start of the session, and then you had a lack of additional measures from the NDRC, so that has ebbed in terms of the mainland gains. But there you're seeing that picture across China. Commodities, by the way, taking a hit as well. We are live in Taipei next. Stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Post-Golden Week blues, China's rally fizzles as traders question Beijing's resolve to add more stimulus. Chinese stocks in Hong Kong see their worst intraday sell-off since 2008. Samsung says sorry. Korea's biggest company apologises after admitting it has fallen behind in AI memory chips. In a moment, we're going to speak to the chairman of Hon Hai on how that company, the world's top iPhone assembly, is trying to diversify. Plus, Hamas and Hezbollah fire a barrage of rockets towards Israel as fighting escalates on multiple fronts, with the conflict entering its second year. So geopolitics and the tensions in the Middle East continue, of course, to be a key factor for these markets. Let's check in now, though, on how European futures are lining up After a very challenged session over in Asia, the divergence between Hong Kong and mainland China pronounced as mainland China came back, of course, from that Golden Week holiday. European futures currently pointing lower by 1%. The FTSE 100 futures off by 51 points. The FTSE 100 will be hit by basic resources, the miners, on copper lower, iron ore lower, oil prices lower. So currently FTSE 100 futures flagged lower by 0.6%. S&P futures currently flat. Nasdaq futures off by 0.1%. Tech saw some pretty heavy selling yesterday. Let's flip the board and have a look. Cross asset. We continue, of course, to adjust the view around the Federal Reserve's next steps. Fewer than 50 basis points of additional cuts priced in by traders by the end of this year. Treasury seeing a bit of a bid currently in the session. That will prove some relief for those exposed to the bond markets, at least depending on which side of the bet you are taking. 394 right now on the front end, 2-year, with yields down around 5 basis points. But again, the trajectory has been higher in the last few days as markets adjust to potentially a slightly less dovish Federal Reserve. Euro-dollar at 109, Brent 79.69, down 1.5%. That is part of the China story. And iron ore taking a big hit in the session, falling 3% on lack of additional stimulus from China. Let's flip the board and have a look at the Asian session then, where the focus really is on this split between the fortunes of mainland Chinese shares and those in Hong Kong. The CSI 300 back from the holiday, up just 4.5%. You'd seen a big pop at the start of the session, and that has eased significantly. MSCI Asia Pacific, the benchmark, is currently down 1.8%, dragged lower by the sell-off in Hong Kong. HSI down 7%. Nikkei over in Japan off by 1.2%. Now, Taiwanese industry giant Foxconn is holding its annual Tech Day in Taipei. The company, known formerly as Hon Hai, is the largest contract electronics maker in the world. And now it's pushing to diversify and build more future-proof income streams. That's the hope, at least. Our tech reporter, Annabelle Drulers, joins us from the event. Annabelle.
Thanks, Tom. Yeah, this is a really big day for Hon Hai. It's the 5th time they've ever held its Tech Day. It's also the 50th anniversary this year of the company. And as you said, it's that focus on what are the future growth drivers for the business. And there's no question today, yes, there's the focus on AIs, or rather EVs, but AI service is really what's grabbing a lot of investor attention as well. And I'm very pleased to say that we're joined by the chairman, Young Lu, this afternoon. And thank you very much for joining us. And as we said, really so much attention is on the AI service and the market share that you're gaining in this area in particular. You just said earlier on stage that sales of AI servers made with Blackwell chips are doing better than expected. Can you share more details around what you meant by that?
Yeah, the Blackwell demand very, very strong. As you know, Jensen called it, it's crazy. The demand is crazy. And we are building up the capacity. And the capacity is, as we mentioned, is probably very, very big, much bigger than we thought. So far, the shipping day will be sometime by the end of the year.
So you're planning to start the shipments of servers, and the demand is better than you expected. What were you expecting, and what are you actually seeing? Can you quantify it for us?
Okay, because there were a lot of saying about the compute. The need for the compute may be saturated pretty soon, but it looks like that the demand is still growing. So that's beyond our expectation.
Again, if it's beyond your expectation, what was your expectation? How many, for instance, were you planning to ship by the end of the year? How many are you actually looking to ship instead?
Yeah, if you talk about our shipping plan, I would say we plan to ship in the beginning of Q4, but due to certain hiccup with the super chip, so it's moving later to the later part of the Q4. From that angle, it's worse than what we expected, but the demand is much better than our expectation.
So the shipment you expected to come earlier in the fourth quarter, it's been delayed to the fourth quarter. The demand that you're seeing is actually better than expected.
Yeah.
Again, can you share more quantity? Like how much of the demand are you trying to capture here? How much of the market?
For that, I really cannot give you the quantity. exact quantity because we just started to build it. Okay, but we see the demand is over what we can ship.
So if you can't meet the demand right now, how long do you see that extending for? What sort of sales do you have booked going into next year as well?
We see in maybe somewhere around 20,000, that kind of a number.
You're looking to ship 20,000 AI servers made with Blackwell chips over the course of next year, is that right?
Right.
Okay, and any particular quarter that you're looking at in particular for that, or do you see it being
it's not
spread
per quarter,
out?
that's a year.
Yes, but per quarter, are you expecting a bulk of those to go in one particular quarter, or do you see it spread evenly across the course of this year, or next year rather?
It really depends on once we start shipping, the demand, whether the demand will change or not. If the demand doesn't change after we start shipping, and the demand maybe will be even higher than we expected. So
what sort
we
of
will not know.
What sort of capacity then? How much can you ramp up production, do you think? How many of these servers could you be providing to the market, do you think?
Okay. For that, I really cannot give you the number because the facility is there, but the equipment is being put in. And also the power needed to build those servers, we require a lot of power to do that. So that's also being prepared. So the capacity of that, I really can't give you that number from my head. I had to go and check it out. I don't want to give you the wrong expectation.
The demand that we see from hyperscalers, there has been that big question sort of hanging over AI for the course of the year. Would we start to see any concerns around that fading? Do you see any of the customers that you speak with, and I'm speaking here about the hyperscalers, that are looking like they maybe need to pause on investments for a period to wait and see if they actually do see ROI?
We haven't seen any of that. We haven't seen any of that concern. Okay. But you probably heard some analysts talking about that concern, but from the market, we don't see, we haven't heard any concern like that.
NVIDIA has very tight control over the designs of its products.
Yeah.
How closely do you work with the company to add your own value to the designs as well, and your own expertise? I'm thinking energy, for instance, is one area, and the cooling technology.
As I mentioned in the past, that Foxconn is most integrated, vertically integrated supplier to the server industry. If you don't count GPU, CPU, and some minor IC components, the percentage that we are able to cover by ourselves is anywhere between 80 to 90%. That tells you how vertically integrated that we are capable of.
When you add that sort of value to the company or to NVIDIA's designs, how much value do you extract as a business, and how much can you differentiate yourself as opposed to other AI server assemblers?
The differentiation in terms of the vertical integration capability, yes, we are one of the best. But in terms of what the added value to the overall server, I think it really depends on how much NVIDIA is pricing their CPUs and GPUs. That definitely will impact our gross profit margin.
In terms of profit margin, then what I understand for AI servers, it can be in the low teens. Do you see a way to expand that and to increase it?
I think in the low teens, you're probably right, but that will have to be based on how much vertical integration, how much components that you're able to provide. So with that, it varies to a certain degree. But because the CPU and GPU is very high price, so the rest of the server has only some limited impact in terms of overall cost.
Right. Chairman, stay with us for a moment. Tom, I'll hand back to you now for this portion of the interview. But Chairman, if I can, I'll continue to ask you some further questions, and this is around the shift to the smartphone space in particular.
Smartphone?
Yes.
Okay.
I want to talk more about the
Annabelle, thank you very much indeed. Annabelle's going to continue that conversation as you see, so you can probably go online and onto the Bloomberg terminal afterwards, get a full interview, but some lines crossing there from the chairman, of course, of Foxconn or Hon Hai, take your pick in terms of the name, in terms of the outlook for demand around the AI space. Coming up, we're going to talk to the CEO and co-founder of DeepKey. It's an ESG data intelligence platform that helps real estate companies achieve net zero, a touch point in terms of the commercial real estate space that, of course, has faced its own challenges. That is coming up next. This is Bloomberg. Welcome back. Now, the real estate sector is facing tighter environmental regulations, rising energy prices, of course, and an increasing preference from customers for green buildings. Joining me now is Vincent Briant, Vincent Briant, CEO and co-founder of DeepKey. It's an ESG data intelligence platform that supports the real estate sector's transition towards net zero with exposure across, 60 different nations. This is a tech company that has raised about $180 million US dollars, works with the likes of Generali and Rix. So broad exposure and also being featured in GP Bullhound's All-Stars event this week, taking place in London, that kind of puts a spotlight on some of the most interesting tech companies across Europe. Vincent, thank you for joining us. Talk to us about the commercial real estate sector, how much pain you're seeing across this sector in an environment of higher energy costs, higher rates, of course, in terms of interest rates, and the need to transition around more sustainable building structures.
Hello, Tom. Thank you for having me. Yes, we see mainly 4 reasons why real estate companies improve their assets' sustainabilities. One is complying with the growing demanding local regulation. Another one is accessing to capital, especially lenders and debt funds. Another one is avoiding brand discounting. And the last one is increasing asset attractiveness. And DeepKey recently undertook a survey amongst several hundreds of real estate asset managers. And this survey revealed that nearly all organizations are facing a stranded asset time bomb. Nearly 90% of them said that they have a high level of financial risk from stranded assets. And 3 in 5 acknowledge that in excess of 30% of their commercial real estate are currently stranded.
A stranded asset time bomb. What is the gap then, Vincent, between the companies, the building, the commercial real estate, and those assets that are compliant and those that are yet to be compliant? What is the gap and how do you close that?
Yeah, it's interesting to see that in terms of industry sectors respondents, the survey highlighted that those facing the greatest risk of stranded assets are first retail, followed closely by industrial sectors, and then offices. And we see that retrofitting buildings to improve their energy efficiency and sustainability is one of the most effective strategies to prevent these assets from becoming stranded. There are, 10 types of actions you can implement in order to reduce energy consumptions and reduce carbon emissions. Retrofitting can include insulation upgrades, incorporating renewable energy sources, installing more efficient and intelligent systems, amongst several things. But by improving the energy performance and sustainability credentials of these buildings, owners can preserve and even enhance asset value, answering these properties to remain competitive, especially in this increasing environmentally conscious market.
Okay, that's interesting. So that's making the case for putting in place some of these actions to improve the sustainability of your buildings. Look, Vincent, there's been a bit of a pushback, hasn't there? Blowback to the whole ESG theme. Are you as a startup here in Europe, are you feeling that at all?
Yes, we can say that we can split the market in two categories. You have people who have deep pockets and they keep investing, especially capex, in order to refurbish assets. Whereas you have other investment management companies that need to ask money from their LPs or from lenders. And these guys, they tend to stop investing due to the low liquidity, less arbitrage, and less money on the market. However, they both categories need to comply with regulation, and it pushes them to actually keep looking at accurate data and making the right decisions, at least to comply with local regulations.
How do you think about the US market? How important is that for you and the team, Vincent? And what is your strategy there?
Actually, the US market shows a growing concern and interest in that topic. It's interesting to see that it's not led by the regulation, but more by the financial efficiency and the money they can make and profits they can make thanks to refurbishment. And we see also there are two categories of the companies. You have, in the US, the topic is very polarized. And so you have a lot of companies that are very much anti-ESG. But the other parts of the market, which usually are US HQ'd companies with global operations, they tend to be very much in favor of European standards and to implement retrofit actions in order to get amazingly financially interesting assets. And this is interesting to see that when you look at our company, Deepki, we see a growing interest in that topic. And today, almost 20% of our revenue comes from the US because there is more and more customers that are willing to implement actions right away.
Okay, interesting. 20% of revenues coming from the US. Vincent, is the business profitable? What's the timeline around profitability if you're not profitable already? And what are your IPO plans?
Actually, over the past 10 years, we completed 3 highly successful fundraising. Last one was in 2022, and we raised overall 200 million euros. But after heavy investments, Deepki just came back to break even, and we always come back to break even before a new round because it's very important for us to have a healthy business model and to make sure that we will use this money in order to grow the business and also to help our clients deliver impact at scale for our customers.
Okay, Vincent Briand, CEO and co-founder of Deepki. Thank you very much indeed, with a touch point there in terms of commercial real estate and that need to create more sustainable buildings and the valuation gap as well that has opened up, a ticking time bomb. One of the companies selected for GP Bullhound's All-Stars event that kicks off on Thursday. This week on Daybreak Europe, we will be featuring a slew of startups, then, including GP Bullhound itself, Luminance. GP Bullhound is, of course, an investment bank involved in backing a number of these companies and behind this event rather than the startup itself, but also Faculty AI, really fascinating. Angie Ma, that conversation as well coming up later this week. Those conversations across the show this week. Stay with us for plenty more on that front. Meanwhile, the BNEF Summit, where energy, finance and technology converge, kicks off here in London today with a stellar lineup of guests. You can join virtually using the QR code on your screen. You can scan that QR code right now and join and tune in for that virtually or possibly in person if there's still tickets available. Plenty more coming up. Stay with us. This is Bloomberg. Welcome back. Happy Tuesday. Less happy if you're sitting in Hong Kong, arguably. Yes, the run-up has been strong, but there's a sell-off right now on the HSI, the HS Tech and the HSCEI as well, those Chinese enterprise stocks listed in Hong Kong. There's a bit of a rotation from Hong Kong into the mainland markets. Mainland investors back after that Golden Week holiday. You did see a pop on the CSI 300. That's the benchmark in the mainland of close to 11% at the start of the trading session, but that has ebbed significantly. The last time I checked, you were up around, 4% on the CSI 300. Don't forget, for the context, you've been up up for 9 consecutive days on this index prior to the holiday, of course, the Golden Week holiday. Now you're back, but a bit more caution seeping into the Chinese markets. The NDRC did not deliver. They talked about some incremental changes, but no additional fiscal support. We look to the Politburo, we look to the State Council then to see if they issue any more concrete measures in terms of the fiscal support for that economy. It's worth noting as well that some of the data that came through over the Golden Week period in mainland China in terms of travel, in terms of hotel stays, in terms of shopping and consumption, generally pretty strong. So that was giving a bit of a lift more generally to sentiment. Real estate as well, property, you saw more sales on that front. But again, the gains that we saw at the start of the session have really come off. So there is some more trepidation in terms of whether or not valuations have become a little bit stretched when it comes to some of these parts of the Chinese market. Let's flip the board and have a look at what's happening in oil, because the disappointment around the lack of additional measures from China today is certainly weighing on the commodities space. You're seeing iron ore down, copper down, oil down. Of course, the geopolitics, the Middle East are very much in focus when it comes to that front. And that is a part of the reason why and the rationale why you are actually seeing this bullish move into calls around oil. Yes, oil down, back below $80 a barrel so far in the session. The last time I checked, a little bit of pressure on the oil markets today. Again, part of the China story. But longer term, there is a build out in terms of these call options. Oil traders, the most bullish in 2 years since Russia invaded Ukraine, and a lot of that down to expectations that you could see further conflict, of course, in the Middle East, and some lines crossing from Iran warning against Israel and Israeli retaliation just in the last few minutes, a reminder of that dynamic. Now, Bloomberg Terminal users can access these charts and others used throughout the show at GTV Go on the Bloomberg Terminal. Later today, by the way, we're going to be speaking exclusively with JP Morgan Chairman and CEO Jamie Dimon at the BACS Tech Stars Conference taking place here in London to discuss AI investments, the US election, always interesting, and more. That conversation at 2:30 p.m. London time. But as importantly, the opening trade is up next. Stay with us. This is Bloomberg.